if the Saudis change their mind, which they just did, and part of the reason we're seeing this hot print and gas prices starting to rise is Saudi just decided unilaterally, you know what, we're going to cut production. We want higher prices. We're going to sell some shares of our big oil company. We want to maximize the price, so we need oil prices up. Well, if we don't have any oil in the reserve to pull, we can't run our refineries. So what happened? There's less gasoline, less jet fuel, prices go up. And then it gets worse because now to refill the SPR, you're going to pay higher prices from the Saudis, which is what they want.
In a surprising twist, Saudi Arabia's oil decision is causing chaos for President Biden. Gas prices are surging, and here's why it matters to you. The Saudis, once reliable crude suppliers and geopolitical allies, have undergone a dramatic shift. As former New Jersey Governor Chris Christie put it, if you won't have a good relationship with us, we'll have a good relationship with Russia. Adding to its complexity, other major suppliers of the heavy crude needed for diesel production face U.S. sanctions. Canada stands as a notable exception, but its federal government isn't particularly supportive of the country's oil industry. This isn't solely a problem for the Biden administration. It's reshaping global politics. Geopolitical implications are at play, drawing the attention of the world. What's more, the Biden administration confronts a greater issue this year, a dwindling Strategic Petroleum Reserve, SPR. It's currently at its lowest level in 4 decades, with promised refilling failing to materialize, even when prices were within the administration's desired range. This leaves minimal room to explain rising prices. Blaming the Saudis didn't work the first time, and it won't work now. Blaming the Russians, too, has become a tired refrain, diminishing its impact with each use. With no other convenient targets to blame for high prices, the situation becomes even more critical. In this video, Mark Yusko delves into the details of Saudi Arabia's unilateral decision and its far-reaching effects on the U.S. and global economies. Share your thoughts in the comments below. And of course, remember to like, subscribe, and join the conversation as it unfolds.
Saudi has left. They've left the building, right? You know, we cut a deal with Saudi in the 70s, the early 70s, and we had a deal, right? We protect them at all costs, regardless of what happens. And they price oil transactions in dollars and create dollar hegemony. And that's gone. It's gone. And they are going to align now with whoever they think helps them the most get to where they want to be, which is, you know, they see a future where fossil fuels are not the only thing, right? And their whole society has been built on the fact that they sit on top of the world's largest oil and gas field. And so they've been trying to figure out what to do. And what they've decided is they're not going to be monogamous anymore. They're going to date around. And, you know, that was most evident. We talked about this, you know, last year, pre-election, where, you know, the big guy said, I'm going to go to Saudi and I'm going to get them to, you know, pump more and lower gas prices so I can get my Dems elected. And MBS is like, pound sand, dude, be gone. We're buddies with Putin and the Chinese now. So, toodles. And Joe came back and said, shit, I got to have oil prices down before the election. So what did he do? He drained the SPR. Strategic Petroleum Reserve is a very accurate description, right? It is a large store of maybe the most valuable resource there is. See, this is one of the things that kind of drives me crazy. People are like, you know, we need to outlaw fossil fuels. Like, you want to stop actually living your life? I mean, look around. Everything you do every day is dependent on fossil fuels. Every single thing. And this idea that somehow we can stop using fossil fuels is just nonsense. Doesn't mean we can't use other things, but can't do it. So this is a very, very important and valuable asset. And being dependent on other people to provide it is a problem. Now, so we created this thing because we were so dependent on Saudi for, sending us oil and U.S. production had fallen. And long story short, we need to have this in the case that, something happens, right? What if they change their mind and we can't get the oil and we can't live our lives? We can't be militarily powerful because we need the oil and gas to, fly the planes and make the bombs. So one little change, actually a pretty big change, is fracking. Hydraulic fracking allowed the U.S. to become one of the largest oil producers in the world again. So Russia's right at the top, Saudi's the number one, and we're right there in the 1, 2, 3. Now there's some subtle differences. We produce light sweet crude versus heavy sour crude. Most of our refining infrastructure in the United States is for heavy sour because we imported so much from Saudi. But and it takes a long time to change refineries because nobody wants a refinery in their backyard, it turns out. They do emit a few pollutants, actually. But so we can't just switch on a dime. So what do? We actually have to export all this light sweet crude to other countries that have the refining capacity for that because we can't really refine it. So we're in this place where we're still dependent on Saudi because they have the heavy sour.
The decision for oil supplies cut was hardly unexpected. What was unexpected was the length of the extension. It suggested that the biggest oil producers in OPEC Plus were done playing around. They wanted higher prices and they were going to get it. With that move, the thread on which U.S.-Saudi relations hang got thinner and frayed. Last year, as oil and fuel prices soared amid U.S. and EU sanctions on Russia for its invasion of Ukraine, the Biden administration sold close to 200 million barrels of crude from the Strategic Petroleum Reserve to arrest the rally. That worked too, not least because it turned out the ample sanctions did not put a dent into Russia's oil exports, which brought prices down. The White House took the credit. Now, just a year before the next elections, prices are once again up and the SPR is at a 40-year low. And the Saudis have clearly shown their priorities no longer align with those of their overseas friends. The Saudis don't have a lot of friends in Washington right now. There's the risk that they start to become Exhibit F if Washington wants to blame someone for high pump prices or a slowing economy again. Eurasia Group analyst Rod Al-Qadiri told the Financial Times this month. Indeed, prices are on the rise. Gasoline prices are up, and although the rise is modest, the very fact of its presence could be cause for concern because gasoline demand declines after Labor Day. What's worse, however, is that diesel prices have added 40% since May, according to Argus data cited by the Wall Street Journal. Diesel is more heavily affected because of the type of crude that's being taken out of the market. Alan Gelder, Wood Mackenzie Vice President for Refining, Chemicals, and Oil Markets, told the WSJ. Saudi's oil provides a higher yield for diesel than lighter crude oils. This loss adds further cost to the economy. All this is happening as hopes are revived that the United States has a good chance to weather the repercussions of last year's events and avoid an all-out recession. In a demonstration of those hopes, there have been expectations that the Fed would end its rate hikes later this year. It now seems that fuel prices will do the job of rate hikes, thanks to the latest Saudi cut extension, which has ignited fears for global supply. Every economy is quite literally fueled by diesel, and with the fuel's prices up so much, everything else is getting more expensive too. Eventually, this would lead to lower consumption, especially if bullish analysts are right and crude moves even higher. What do you think happens if this escalates further? Can the U.S. handle the impact? Let us know your thoughts in the comments below. Don't forget to give us a like, subscribe, and turn on notifications. Thanks for watching.